Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, July 19th, just before the close. Continued outperformance from the Russell 2000, really on the back of financials and banks. That area has really bolstered the small cap space. And, are we getting a little stretched in terms of this reversion to the mean trade? Maybe. We'll take that day by day. I don't know how your trading week went. I had a bizarre week. Almost daily, I had something bizarre pop up in my trading. For example, we bought an equity called GE Vernova this week, GEV. You've heard me speak really over the last year about that infrastructure play, the grid, improving it, improving utilities, improving large industrial power generation needs. And that's really where GE Vernova fits in, large gas turbines. But they have a wind component where they make wind turbines. No sooner did I buy the stock goes up 3%. I said to our trader, Shay, we're in good shape here. Next day, the stock starts falling. 2 hours later, I start reading about items from the wind generation patch off of Cape Cod washing up on the beach. Stock's down 6, 7, 8, 9% in the space of just over a couple of hours. Strange trade. I say we all have lost money many ways, but this is a first, a windmill washing up on the beach. Then I wake up this morning, jump out of bed, Microsoft and CrowdStrike in an upgrade problem on some software that CrowdStrike was employing into the Microsoft Outlook and Microsoft universe. Headaches today. Banks down. In the airlines, by the way, the planes were fine, but the infrastructure of the airports down. So headache after headache. We own Microsoft, we own GEV. Microsoft shrugged it off. CrowdStrike down about 11, 12%. Be interesting to see if that opens a door for some rivals in that space. They have been thought of as a gorilla in that area. So very interesting. What are we looking to do? Because we do have a little bit of cash in US ETF, even in our core account and in our tactical account. We have our eyes continuing to be on that industrial basic material space. Now, more than 2 and 3 and 4 weeks ago, technology starting to pull into that area that I consider reasonable. Remember, the term value is the most overused term in the financial business. We're not looking for value, we're looking for mispriced securities. Two very different things. When we're looking for mispriced securities, it's securities that the price is not reflecting potential growth. That's what attracted me to GE Vernova. That's starting to attract me to add to our tech area, where we still see the possibility of good, solid 20, 25, 30% growth in some names that are now starting to tick down to a forward PE ratio of 17, 18, 19, 20. Not the whole tech universe, just different areas. So something that was mentioned to me young in my career was do not get attached to that term value. Mispricing. That's what we're looking for, regardless of asset class. Bonds, stocks, commodities, currencies. What is mispriced? Where can we expect a reasonable return going forward? So we'll have our eyes out next week. Right now, we're going to shoot over to the Moose, John Mousseau, who has some fixed income information for you.
Hi, it's John Mousseau. I'm the CEO of Cumberland Advisors. It is Friday morning on July 19th. This is the bond report. Yields up about a nickel to 6 basis points across the board in treasuries this morning. A lot of that is, just kind of a drift up. Probably a little bit of the assumption that former President Trump might win the election. We know that elections tighten, and that will be versus either President Biden or if there's a replacement for him. Elections tighten as you get further on into the election cycle. But when you look at muni bonds this week, very strong demand. Yields are actually down a couple of basis points this week. So that part is very good, and it shows the reflection of continued demand based on the rollover of money that started at the beginning of the month. Not a lot of economic numbers this past week. You did have higher initial jobless claims, but you did have stronger spending numbers. And you also did have, housing numbers that have gone from positive to negative on housing starts. It's jumped all over the lot this year so far. We know the backdrop has been somewhat slower economically. That is why you've seen the market start to basically factor in Fed rate cuts as you go forward. We would be cautious on that. You started the year with the market pricing in 5 or 6 rate cuts. That quickly went to only 1 or 2, and in some cases 0 as bond yields rose in the spring. They have come back down now. You've gone all the way from a 470 on the 10-year to basically a 420 to 425 in that range. And now they're saying, oh, we're going to have a rate cut in September. We might have another rate cut in November or December. A little caution on that because the history of the Fed, and we know the Fed would like to cut rates at some point. They want to be convinced about inflation. But the history of the Fed is they don't really change direction a lot during an election year. So if they're cutting rates because the economy is weak, they'll continue to cut rates. If they're raising rates because the economy is strong, they'll continue to raise rates. Or if they're in the holding pattern that they have been in now for the last year, they'll probably continue to be in a holding pattern. So, certainly the inflation numbers are between now and September will be key. We know next week they have some PCE data. That will be key for the Fed. And, I would say you would really need to probably have a pretty good drop to have the Fed move off course. But we will watch that. Certainly the market thinks they're going to cut rates. We hope everybody has a great week, and we'll see you next week. Thanks.
Thanks, John, and really appreciate you spending time with us as loyal viewers. Enjoy the weekend.